Have you filed your taxes yet? The deadline of April 15th is soon upon us, and it's often when we put off things to the last minute that mistakes are made. Joining me is certified financial planner Regina McCann, Hess, founder of Forge Wealth Management in Malvern. Good morning, Regina.
Good morning.
So these last-minute procrastinators, sometimes people make mistakes at the last minute. What are some of the key mistakes that people make when filing their taxes?
Yeah, some of the mistakes are missing or inaccurate Social Security numbers.
Okay.
Then they can also misspell their names.
How do you misspell your name?
Well, I think you're rushed or you're typing on your keyboard and it's a fat finger mistake.
Oh, okay. All right.
That could happen
Okay.
to the best of us. Another mistake would be math errors.
Okay.
So that happens. A big mistake that would be really hurtful is if you file incorrectly for your filing status. So if you're married, you file married filing joint. However, if you file married filing separately, you lose a lot of deductions.
Oh.
It could have a huge impact on your taxes.
Do people do that as a mistake, or do they do that on purpose?
Sometimes it's a mistake. Sometimes it is on purpose if you're going through a divorce or close to the end of the divorce. But a lot of times people will negotiate that and still file married filing jointly.
Okay, to make sure they get everything they're due.
Yeah, it's a huge, huge issue.
And what about bank numbers? You know, a lot of people are, do direct deposit if they are getting a refund.
Yeah. So we're finding that some people are putting the wrong bank account numbers, sometimes reversing numbers, and then their refund check goes to a different bank account.
Oh, I want my money. I don't want Sam Smith somewhere getting it. And what about, signing in the old days you had to sign the return. Do you sign it still if you're doing it like with the software?
Well, sometimes you still sign, and a lot of times if you're using an accountant, they have to do it electronically. However, you have to sign a form for the accountant for them to e-file.
Okay. Oh, that's what my accountant gives it to me every year, and I always wonder what that was for. Okay.
Yes.
So we're in 2025 now. Is there anything I can do for last year's taxes to lower my tax burden? Everything's done?
You have a little bit of time. You have about a week right now to still contribute to your IRA.
Oh, for
2024.
Oh, okay.
Yeah, so you can contribute $7,000 to your IRA for 2024. Plus, if you're over 50, you can contribute an additional catch-up provision for $1,000.
Oh, okay.
Plus, if you have a healthcare spending account, an HSA, those you can still contribute to as well. That's like $4,150 if you're single. I think it's $8,300 if you're a family. Plus, you get a $1,000 catch-up provision. If you're over 55 there, you get a $1,000 catch-up provision.
And health savings accounts, we need to point out, that's different from a flexible spending account.
Yes.
So HSAs are usually offered through your employer.
Yes, and it's part of your health care benefit, and those are very, very valuable for long-term strategies.
Okay. What about you said IRAs. What about my 401k? Can I stick money in for last year?
No.
If I have a max? Oh.
Sorry.
All right. You're a Debbie Downer.
I know. I'm so sorry. That ends at the end of the tax year, but it's your opportunity to see, well, wait a minute, can I put more in this year? Can I do my catch up for this year?
Okay. What about 529 plans? I know a lot of people with kids have those plans for educational purposes.
Yes, those are one of my favorite things to talk about. Those also have to be contributed by year end. However, in some states like Pennsylvania, New Jersey, and Delaware, you don't get a federal tax deduction, but you do get a state tax deduction for your contributions.
Okay.
So they could be helpful.
Okay. We mentioned the 401k. Obviously, I can't put additional money in for 2024, but there is some good news for people that are contributing to a 401k this year.
Oh, yeah. 2025, we have a super catch-up provision. It's like super amounts of money. So if you're aged between 60 and 63, you can do an additional $11,250 as your catch-up contribution. So you get a little bonus.
So before, the catch-up provision only applied to 50 and older. And so is this an addition to that, or this is merged with that?
This is merged with that. So only people aged 60 to 63 can do the increased amount. If you're below that, between 50 and 59, you can do the regular catch-up, but between 60 and 63, you get the jacked-up version.
And do you recommend people try to max out their 401ks?
Always.
Why?
Because it's money that you're saving. It's growing tax-deferred, and you need so much money in retirement. You're going to be retired for 20, 25, maybe 30 years. You're not going to be able to make that money when you're in your 80s, and you have to make that money last. You may have Social Security, but you may not have a pension, so you're going to have to supplement represent what your needs are, and that's going to come from your 401k.
So I always tell people maximize whatever your employers offer, because a lot of times there are things that people aren't even aware of. You know, you go to your HR department and see what they have available to you.
Yeah, and then there's a perfect example of you're leaving money on the table. If your employer matches 4%, minimally contribute 4%, because that's what I call free money, right?
Yeah.
I do still recommend that you contribute more than that 4%, because that is your money, and that money goes with you wherever you are.
Good advice.
Yeah.
And every little bit helps.
Yes,
Thank you
sure.
very much. This is Regina McCann, Hess of Ford Wealth Management in Malvern. Thank you so much and great advice.
Happy to be here.